Well, hello, everybody. Once again, we are here at the end of the weekly market recap covering this week, August 31st to September 4th. And what a week it has been. I mean, we finally got some market action different than what we've been used to. And as always, I'm here with Jill Malandrino, global market reporter for NASDAQ. And it certainly gave us a lot to talk about this week, Jill, wouldn't you say?
It certainly has. And if 2020 has been consistent and proven anything, it's that it is unprecedented in so many ways. And I think what's interesting with the sell-off that we saw this week is we're back to a market that the moves are anywhere from 3 to 5% to the up or downside, not quite as extreme today, but certainly you did see, stocks almost returned positive for a minute today. So certainly there were big moves in there only to sell again. So, when you see these moves of 3 to 5% happen in one session, whether it's to the up or downside, the move on the upside, it's not natural either. So I think that's what 2020 has really shown us. But with this week, when we saw the sell-off and the moves in March, that made sense. Economies were shutting down. We get that. I don't know fundamentally what happened this week outside of valuation, outside of the run-up. There's some chatter out there that there was some, big unwinding going on with SoftBank running the tech rally up. I've yet to see any confirmed reporting on that, but I think that's what we need to prepare ourselves for, certainly through the election. And just 2020 just keeps it deliver. That's all I can say.
Yeah, well, these are our news headlines for today. Is U.S. tech shares start to sell off? Is it profit taking or another wave down, like another wave of the coronavirus? I really agree with you. I think that everybody knows that the movement to the upside has been kind of exaggerated, to say the least. It hasn't had really. I mean, it certainly doesn't seem to fit in with what's going on in the world. There's all kinds of discord in the United States. There's all kinds of people, losing their jobs. Although we did get some positive job data today, which was a little bit of a shining light. But it just seems like nothing makes sense, that the normal rules don't apply in 2020. The normal market action doesn't seem to apply. And this is a huge rally that made new highs coming after basically 13 years of a bull market. I mean, so, this could just be a very, very big zigzag / indication of further correction. Or is it just that things are up so much and people just wanted to take some money off the table going into the election? And there's really no way for us to know what it is at this point. But I think that what we have been talking about here each and every week is that you're better off to err on the side of caution. And yes, certainly you have to believe the rally if it's going up every day, but certainly you have to also understand that at some time the music has to stop on the bandwagon. And it looks like the bandwagon stopped this week, right? I mean, that's pretty much what I can see.
Yeah. I think part of the concern is, and we were talking about this last week, is that the concentration of stocks that led the way up are really what's making the impact on the way down, which isn't a surprise. I mean, it's basic math, but the concern is that when you have so many indexes and so many ETFs and so many investment vehicles weighted to these names, it's certainly going to be impactful to your performance and certainly investor portfolios. So, I don't know if they'll make that same kind of recovery back. I think the concern is, and you and I have been talking about this, yes, these trends were in place, and yes, they were accelerated by COVID-19. You can even argue it's like what should have been 3 to 5 years down the road just happened in a span of 6 months, and investors were rewarding those stocks by bringing, the growth in earnings forward by that much, right? So I don't know if the market came to terms with that. I don't, but that's really where I think the run up was. And then there was also, like I said, there's also speculation due to running tech stocks up, and the volume that we saw within call options was another reason it was attributed to in that whole unwind trade. So there's a number of forces at work here, not just the charts, not just fundamentals, but certainly something's going on.
Well, I think that what we learn in basic portfolio theory is that diversification is the key to less volatile market action for your portfolio. And what we've had is kind of reverse diversification, concentration into 5, 6 names. And the entire market got concentrated into 5 or 6 names. And there was a bifurcation or a movement away from all of the vast majority of the stocks on the indexes, where the indexes became very heavily weighted towards these 5 or 6, 7 names. And I think that that certainly is having the impact and creating the volatility that we're seeing. And you're 100% right that the pandemic accelerated the analog to digital trend by putting everybody to digital in a much more rapid fashion and change the economy rapidly. The other thing that's going on here is the U.S. dollar. The U.S. dollar has been a massive factor in that the dollar had been losing value, and what that was doing was it was driving people's money into any way to store value. And I think people were putting their money into the stock market to kind of just do something with their money because they weren't getting any interest in the bank, and the dollar was getting more and more debt. As a result, they had nowhere to put their money. They put it into the stock market. But what happens when the stock market goes down? You go grab your money, right? I mean, that's what happened. I mean, everybody started grabbing their money at once. And people get scared when they see their value of their account be way up. It's great, but as soon as they start to see it go down, fear is a very powerful and striking emotion. So I think that a little bit of that played in too. Would you agree?
Yeah. And, there's also that narrative out there that there's so many retail investors that have come into the market over the past 6 months. Our chief economist and myself did a piece the other day on it where they've actually seen a 20% increase in retail activity. My concern with that is that they participated essentially from the March 23rd lows to where we are now, taking these, seeing these massive gains in stocks like an Apple, like a Tesla, and perhaps we're not prepared for the sell-off that we've seen over the past couple of days in those names. So I would imagine there's some momentum behind it. I would imagine it's certainly a crowd trade. Yeah.
I would totally agree. I think that, the Robinhood traders and investors, but it's not just Robinhood. I mean, there's about 50 other apps out there. There's Doe, Public, Betterment. I don't even know all of them, to be honest with you, but I know Doe and Public, and I know Robinhood, and there's the Tasty Trade free trading app, and some of them are free, some of them aren't. But I mean, there's a ton of retail investors who had nothing to do but sit in their home and put their money in the stock market because they weren't getting any interest in the bank. A lot of them were investing with the money that came with the government, from the government as well, the stimulus money and the additional unemployment money. People seem to be saving more, which is a good thing, but they also seem to be gambling with it somewhat in the stock market. So I don't know if that's a good thing. It also seems like Trump has a new tone. The new tone to Donald Trump. He seems to be coming out swinging in this kind of law and order fashion that may have also. I'm not sure if the market is reacting to the very high likelihood that we may have something that's unprecedented in the United States, although we had some kind of foreshadowing to this unprecedented possibility of a contested election. I know that the VIX shot up based on the fact that the election is pending, and there's a tremendous amount of uncertainty related to that election. What are your thoughts, Jill, on the uncertainty with the election and the possibility of a contested election in the United States? And it seems like, I've even heard people saying that they think that Trump will use the military in a way that's unprecedented and potentially, I don't know. I've heard all kinds of crazy things this
week. You know what? My concern isn't necessarily the market, right? It's more the social side of it that's concerning, particularly when we think about our national security and our own personal safety. Look, if the market is doing what it's doing and the economy slowly continues to improve for whoever, whether it's Trump or Biden that gets in, I think that's more important to the presidency as it relates to the market versus if a Democrat or a Republican wins. I think it's really like how well the economy is doing. But there's a couple polls out there where they're running neck and neck. And since the seed has been planted that, all these election results are going to be fake and they're going to be manipulated and all that, that seed's already been planted into Trump's base. And we've seen that there have been clashes between BLM protesters, I would even argue rioters. I think the BLM message has unfortunately been hijacked, but that's a different conversation, and unfortunately so. And then you have, Trump encouraging his base to counteract those measures. So
I mean, we got fights in the street. I mean, that's
And to me, like, that supersedes even what's happening in the market. I find it incredibly upsetting that people who are Americans are fighting with each other. I mean, and I think that's really what the concern is, what the reaction is going to be on a social level, more so than anything else. I don't even know how to respond to that.
I mean, people in Texas, like, we have the right to secede. I mean, I've never heard this in my life, that people in Texas have said, Texas has the right to secede if we don't like what's going on. I heard that a lot in Texas, I have to say.
Well, you know what? Next time they get a massive hurricane that wipes them out like it did, a few years ago, and they need federal support, they might want to think about that.
They might want to reconsider that. Exactly. Yeah.
Right.
So certainly I see a lot of discord in my travels, and I've feel it as you travel around the country, that there's, there's definitely a level of uncertainty that's really, in my experience, I've never experienced anything like it. And, but for the most part, things are pretty tranquil. Seems like the coronavirus fear, at least from the sense people have gone on and kind of are dealing with it in a much more day-to-day fashion. I don't think it's as much, in the mindset as it was a couple of months ago. Although it certainly appears to still be in the numbers. I see that there's certainly been high numbers with kids going back to school and whatnot. So we'll see how that progresses. But let's jump to the charts. The first chart that I have up here is of the QQQ weekly, and this represents the NASDAQ 100. And I mean, if there's a technical saying that we use in technical analysis that sometimes up to 70% of the move. And, I always had trouble with this. I mean, that 70% of the move could be in the last 30% of time. And this is a very long rally that we've had in the technology sector. It actually started right after the financial crisis in 2009 and 2010. But I mean, look, if after this very deep pullback on the pandemic, I mean, we had a breakout, and now this week is actually what we would call an outside bar week, and it actually exceeds to the upside and on the downside the prior week, which is generally considered a reversal signal. So if as a pure technical analyst, just looking at price and volume, this is the reversal. This is the top. You don't get volatility like this. Look at the volume here compared to the volume of this week. You have a huge volume spike. Next week will be very telling. I believe that next week we're going to see. I mean, we have I believe it's the Labor Day weekend, right? Monday the markets are closed, so we have the long weekend holiday, and we got a 4-day week, and I believe that it's going to be a very, very telling and continually volatile week, based on from what I can tell. Would you agree, Joe?
Yeah, and you make a great point there, where the volume supports that move. Whereas if you look at the 5 weeks before that, when we saw that extreme move to the upside, clearly there wasn't as much volume participation there. So you're right. We'll see if we get that follow through for the shortened week next week. And I think that is the case, and there is a little bit of reason for concern because the volume certainly outpaces to the downside than it did on the upside.
Yeah, I'm going to just draw us on the chart something I've never done this before, so this is a new territory for me. So from a technical standpoint, this is the pre-pandemic high, So this was the area that we broke the pre-pandemic high. This is the lowest volume time of the year, generally one of the two lowest volume times of the year, which is the end of August going into the other low volume time of the year is between Christmas and New Year's. But end of August is because most people either go on vacation or most of the country's kids go back to school the last 2 weeks of August. So technically speaking, it would be actually healthy for the QQQ to go back to the point from which it broke out of. So it broke out above the pandemic high here, and then it basically pulled back to the if it pulled back to the pre-pandemic high, that would actually be normal, healthy, technically correct market action. This would basically be coming like a neutral candle, meaning that you have this point being the midpoint, this be the low, and then this being the high. And that would be very, very normal market action from a technical standpoint. And this is on the QQQ. And the reason I'm spending more time on the NASDAQ 100, because the NASDAQ 100 is what actually drove the rally. It has been in the driving seat of the rally, that we've watched, which has been absolutely amazing. So let's take a look at how this plays out on the SPY weekly. On the SPY weekly, we probably would say that this would be the key technical level. Let me see if I can find a better laser. I'll just use my laser pointer. But here we made a peekaboo new high. And this is the thing that really, says to me that this is the short-term market top here. Unlike every other time that we've talked about potentially being market tops, every single star is in alignment this time around, meaning that the SPY made a new high post-pandemic and pre-pandemic new high. So it basically made a peekaboo new high here on the SPY. The QQQ, obviously, we know that it's been making new highs and new highs for a long time. The DIA basically came up and put in a slightly lower high or double top, which is also a reversal signal. So now we have all three major indexes giving us reversal signals. And we have the US dollar, not shown here, also at a reversal point, putting in a triple bottom on its daily chart. So this is the first time that we've had every single element come into alignment since the pandemic started. And certainly the SPY's level that we'd be watching for, if it does make a pullback, would be this area here, which was kind of mid-pandemic mid-pandemic recovery, and then the first drop or the first cascading wave from the pandemic. So if it were to drop, the SPY has some support in the 305 to 310 area. And that would actually be healthy market movement, healthy market action after the kind of run that we've had to the upside. Mm-hmm. So just figured I'd point out some of these technical levels that may not be on everybody's mind anymore, but certainly are on mine. As for the Dow Jones, on the Dow Jones Industrial Average, this is probably right in this level as well, somewhere in this level of around 255, 250 would be the kind of support level that we have from, again, the initial run up on the recovery, but also the first wave down in the pandemic sell-off. Next, we have today's action, and of course the daily chart. And if you look here on the Qs, I mean, you have this is called an N-shaped top, which is something that is been very indicative of the sell-offs, at least in the recent market that I've experienced. Hold on a second, if I could change the ink color here. There we go. So here is an N-shaped pattern. It looks like a small cursive letter N. And after that N-shaped pattern, once it broke through this support level, I mean, it just cascaded down. And then it made a secondary cascade down. But then today, at the end of the day, we had a little nice bounce and recovery. We actually managed to hit the 50 period moving average on the QQQ, and then it bounced strongly off there. And from a technical perspective, usually what the reason you see that is because there's so many people that have been watching stocks like Apple, Tesla. We call that the envy buy from technical analysis, where everybody who's been watching these stocks and thought that they were too expensive or didn't want to buy them at these levels finally step in and say, okay, hit the 50 period moving average. I think some buy programs are programmed to kick in as well. And I think that might have accounted for the reason for the bounce. We had a very, very strong bounce off the 50 period moving average on the daily. And obviously you could see that we were very extended to the downside on the 60-minute as well. So those are just some of the things that I noticed technically in watching this cascading sell-off. And I guess this is what we've been talking about all along, Jill, is that stocks like to walk up the stairs and then jump out the window.
They
right?
do. I also think, and I remember this pattern occurring a number of times, that every time we see this run up in stocks, and then we also see the VIX having an enormous run as well, it's always like 2 or 3 days after that where things start to fall off the cliff. And it's like, if you think about it, on Tuesday, I think that was the strongest day of the week. And then you also had the VIX moving. It's like you did great with your longs, but you also did great with your hedge. That's not typical.
No.
So when you see these kinds of little, indicators in the market, it does give you concern to pause or, really evaluate what your positions are.
And this is exactly what you and I have been talking. Remember last week we said we saw news articles that the bears were dead. Clearly they're not dead. they were just waiting and hiding out, right? So I mean it's funny that they had all the articles out in the news. Oh, the bear's dead on Wall Street.
Yeah, but I mean, even look at this sell-off. Look how high. Look how stocks are still up. It's not
still up. Yep.
Yeah, I mean.
This is like I said, it's a combination of, and the other thing that's amazing is there's no catalyst for it. There was nothing that happened from one day to the next, except potentially, and we're going to talk about that when I bring up the charts, potentially Google antitrust, murmurings of Google, and I'm sure you'll have something to say on that. Obviously the Tesla Apple splits occurred. Which is something else that I don't even know if that's a catalyst or not because it has no material change, but certainly not a catalyst like the pandemic. The pandemic, obvious catalyst. This, not so obvious of a catalyst. So here we have the S&P, very similar, not as bad of a sell-off as the QQQ. You and I have been saying that the technology led the way up, and that technology would probably start the way down. So that certainly was the case, as we can see here on the charts. The DIA certainly held up better than the Qs and also the spiders. It sold off, but certainly not as drastically as either of those two. It also bounced better at the end of the day. Even gold sold off, which is, has been the case lately. It's been trading with the market. What are your thoughts on gold trading with the markets?
What's so interesting is Bitcoin sold off as well,
yes.
Which I thought was a bit surprising because when we had the first wave of sell-offs, we saw relative outperformance in Bitcoin perceived as a safe haven asset, if you will, that it doesn't fall under the same fundamentals as stocks do, right? And you can't there's no fundamentals really behind them on a higher level, right? So I don't know if people are doing it to raise cash. I mean, again, too, Bitcoin had a fantastic run as well. So
tremendous.
I don't, like I said, without anything fundamentally changing, and we'll get into that more when we discuss Google, but it was everything, which was so insane because we were saying before, everything was moving up in tandem, right? So volatility.
Very similar to the pandemic sell-off.
Bitcoin, gold, right? And then and it all came back down. So that's unusual.
The only thing that was up was the dollar. Dollar's up. It seems like they all move inverse to the dollar. I mean, it's like dollar was up slightly, Bitcoin down, gold down, stock market down. So.
Yeah.
All right, so here we have Apple, which is what we had been saying is that, I mean, there is the move on Apple that was just a drastic drop that seems to have started everything. I would say that Apple was, part of the start of the sell-off. I wouldn't say it was the whole thing, but certainly Apple was part of the start of the sell. It actually ended up today, I believe. So I mean, who can figure? I mean, Apple started the sell-off, but today seems to be a decent bouncer. If you look here on the 1 minute on the 1 day chart, at the time that I took the snapshot, which is very close to the end of the day, Apple was actually a green bar. And I think that's all the people piling in buying Apple after it made this drastic drop. So I don't know if that's just a bounce play or what, but not really much to say more about that on Apple, but here is Google. Talk of antitrust breakup, that they have a monopoly. So I'd love to hear your thoughts on Google. Is this the start of the breakup of the tech giants?
Well, this is an interesting one. There was reporting on it yesterday. The Times actually broke it, and of course, other outlets picked up on that. So the Justice Department plans to bring an antitrust case against Google as soon as this month, right? And that's the result of Attorney General Barr overruling career lawyers who said they needed more time to build a strong case against Google, which is one of the world's wealthiest, most formidable technology companies. Now, this is according to 5 people that were briefed on internal department conversations. The Times has not actually named names, but the concern is virtually all the 40-something odd lawyers that are working on the case opposed the deadline. They just did not have the proper time to put this case together. It's going to be incredibly complex. You're looking at binders and binders and thousands of pages of legal documents that they need to work on. So there's some disagreement about the tactics. There are some career lawyers who also expressed that Barr wants to announce this case in September to take credit for an action against a powerful tech company like Google under the Trump administration. Again, that's conjecture with this New York Times article. If the administration's history is any guide, it's not too far out to think that's the case. It seems day to day we're uncovering something that goes far against the grain of the norm. So I don't know if that was necessarily I don't know if that would, if Google triggered it, that was enough to take the market down with it. Could that potentially impact stocks like in Apple, like a Microsoft and Amazon, certainly, where there's been calls to bring these investigations to light, because they're so big, and they are concerned about antitrust. So that could have been a catalyst, but again, I think there was a little bit more to it than just that. But certainly, if this is going to be, if in fact this article is accurate, and they do bring a case in September, it's going to be interesting.
I mean, that's going to be one to watch for sure. I think that like a company like Apple doesn't have too much to worry about. I mean, there's a ton of competition. Apple's been losing market share. I mean, year over year. I mean, it's got a lot of competition. It's just kind of a very diverse company. But certainly, Google has, and Facebook, kind of have a very, 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 very strong position in their given area. In terms of browsing, Google tends to be what everybody uses, and certainly in terms of social media, Facebook is the giant there. And I do think that there has been a tendency for politicizing things and acting. So yes, it's speculation, but there's certainly a pattern of behavior behind it, which makes sense. Although taking the market down, I don't know if it was what took the market down, besides for the market being so up and just being so extended, incredibly extended. Speaking of incredibly extended, we have Tesla, which also I think is just a company that needed to take a break. I mean, if you look at that chart, it's just stair-stepping its way up. It's just stair-stepping up the whole way. And then this is a big step, and then this blast off the upside, just really tremendous. I think it just needed a break. So for me, tremendous run up on Tesla. The sell off was pretty phenomenal as well. But after the split and everything, I think the stock really needed to kind of just, deflate a little bit. So any thoughts on Tesla going forward? Do you think it's going to continue to have this energy? I just don't see how.
You know what? It's so interesting. Fundamentally, I don't understand it. I think before the sell-off, it was something like they had to make $1 million a car to justify the valuation, something crazy like that. But when you think about a higher level story, Tesla isn't just about the cars. We've been saying this for a number of years. It's a technology company at the end of the day. You also have Elon Musk, who essentially forced the auto industry to make a massive shift. He's literally like solely responsible for that. So I think you have that narrative.
He's a disruptor.
He's disrupting the space industry. We see all the technology with SpaceX. We see, I know this doesn't justify the valuation, but when you think about it from, perhaps a retail investor's eye, that you see what a Tesla vehicle looks like, then when SpaceX did their incredible launch over the summer, it looks like a Tesla vehicle inside. He is changing everything. And I would imagine that even though these are all separate companies, there is that Musk factor in there.
Yep. And I think it's just if you're a tech, if you're into tech, I mean, you want to own, there's like the Tesla cult following. I mean, it's like, there's an element of Tesla has come to represent disruptive technology. And I believe that there's an element of that where people just want to own this disruptive technology company that's done so much to change the automobile industry. And now the founder has even done so much to change the space industry as well. So.
Yeah, it's almost like I remember when BlackBerrys first came out, right? And that certainly changed the way that we do work. But then when Apple came out and improved upon it, and that smartphones that totally changed the way that we do business. Who would have thought in early 2000s, right, that we would be conducting trades on a smartphone, looking at health documents on a smartphone, or the way we track our health and so forth. So, and Apple was a catalyst to that. And that's the best way I can compare it. It changed our lives.
I remember the first time my friend from San Francisco, we were actually at the hospital with my daughter because of a problem that she had. And he was showing me his iPhone. And I remember, I was like, wow, that's amazing. It had everything in it. It had music, it had internet. It was like, I was amazed. And I still never will forget how disruptive that was. I mean, everybody had, they had iPods, right, to listen to music, and you had a PDA to do your organizing. And then you had a phone. They just combined all of them and it disrupted everything. So yeah, I think it's an element. Tesla has come to represent disruptive technology. And Elon Musk has disrupted not just one business, but many businesses, and certainly the auto industry and the way we drive is one of the things that Americans have always been have always had a very great affinity to. And speaking of disrupting the auto industry and disrupting a specific industry as well, which is the gasoline industry, right? The oil industry, and Tesla has really disrupted, the gasoline industry as you have a very big move towards electric cars and non fossil fuel producing vehicles, as well as all kinds of other technologies. And then you have the pandemic thrown on top of it, where people aren't traveling as much. You have Exxon Mobil. I mean, look at this chart. I mean, this is the epitome of a downtrend. It never recovered from the pandemic, and certainly it doesn't look like it's recovering now. This is the weekly chart on Exxon Mobil. I mean, it just looks like the world has changed away from Exxon Mobil. This is the baby of the Rockefellers. So Exxon Mobil, certainly not looking good. And I wonder what your thoughts on the prospects of the oil industry going forward, because being in Texas, I mean, everybody seems to be looking for something else to do these days. I mean, like Austin has become basically a technology hub.
Oh
Um,
yeah, oh for sure. And Austin was on um, following that trend for a number of years. It was becoming, a hotspot for technology, and certainly that's been accelerated. So with oil, with demand as low as it is, the key there is business travel will be depressed for a number of years. So certainly that's going to impact oil companies. So it kind of goes back to what we've been saying, I think, since day one of doing this, that the stocks that were leading prior to COVID-19, the stocks that led us after the March 23rd sell-off were technology stocks. So I can understand some rotation into these names, but if you ask me longer term, where are you going to find growth? Exxon Mobil or a technology company like Microsoft and Apple, and all of these, even that there's something called the Nasdaq Next 50. These are the companies outside of the Nasdaq 100 that are smaller that could be in the Nasdaq 100 at some point. That is where I'm putting my money. I understand Exxon has the dividend. I get all of that. I get it could be a rotation trade. I understand all of that. But longer term, you're going to get growth out of technology. It's that simple.
I'm on one of my little play fractional share accounts. I just set up Exxon Mobil because I for exactly the same reasons. I feel that Exxon Mobil, although yes, it's does have a great dividend. The price is very, very historically low. The infrastructure to create an Exxon Mobil is it takes 10 dozen decades to build that kind of infrastructure and that kind of distribution network. And it certainly has a value, and it has real substantial value. And right now that value is not being represented by the price of the stock, in my opinion.
Right. And Mike, one other thing too is that these oil companies are also married to this movement in crude, right? Technology companies and are, to a certain extent, it doesn't impact the basic fundamentals of their stock price, right? So that's one element that's removed. Now, of course, there's always going to be customer demand and all that, but they're not married to a commodity on that scale.
Yep, absolutely, makes good sense. So let's go to the last one, which is actually it's not the last one, but second to last one. We have Boeing, and this is another one that I really wanted to get your thoughts and insights into. This is an airplane manufacturer. Certainly, air travel has been affected. The stock has been obliterated and never recovered, but it was getting obliterated, even before the pandemic. The pandemic exacerbated the move down. This was pretty much the breakdown from the pandemic is right here. Here's Boeing. Here's the breakdown on the pandemic. It never really recovered on the way up like the rest of the market. But this is something we've seen across the board where, many great traditionally well-known companies have not participated at all in the pandemic, post-pandemic rally. And this is why I brought up these charts, because yes, there was a huge sell-off. There certainly wasn't a huge sell-off in Boeing because it never really bounced. So thoughts on Boeing?
You know what? Boeing is one that I didn't even understand pre-COVID-19, considering they had to halt manufacturing and getting new planes to the airlines with the issues they were having with the MAX, right? And the stock actually performed quite well. I mean, you can see it. It didn't take that much of a hit like I thought it would. I mean, it was the optics around that were awful, right? And so I never understood that anyway. And it's so who knows what it's going to be? Who knows if we're going to get demand from airlines for Boeing? Even Airbus falls into the category as well. But if their fleets are going to be grounded for the most part for the next 2 to 3 years, how does that impact stocks like a Boeing?
That's my reason I brought this up. I just don't see. I mean, this is why the stock is down, and certainly it never bounced after the pandemic. There's a lot of stocks out there that you look, and there's a lot of stocks with charts that are just terrible, like Boeing. I mean,
right.
And that's the thing. It's a bifurcated market.
Right, but that goes back to your point on, some quick short-term value trades, if you will, into finance or to Exxon Mobil. Because if you take a look at those stocks, you might see like pops and drops in the stock if you look at it at a longer-term chart. But when you look at, let's say, technology companies or consumer discretionary or healthcare, it's more consistent to the upside, whereas you're just going to maybe get some rotation trades.
Yep. And speaking of this kind of hybrid technology, well, this is I was really this is not the hybrid technology one, but IBM I thought was a technology company, but apparently it did not participate with the pandemic rally. I mean, what's the story with IBM? I mean, I don't. What is it?
I have been so wrong. Like, there's one stock, no matter what, you just get it wrong. Well, IBM is that for me. I've been so wrong on it for, I don't know, the past 10 years, thinking that they were going to be able to right size that ship and become more of a software company, like a Microsoft-ish, with through their acquisitions. And it just, I've been so wrong, and I don't know why. I think some of their acquisitions haven't panned out quite as well. I think they have been, slower to the game with cloud relative to Microsoft and Amazon. I just don't get it, and I've been so wrong on it. But that's my one stock I just can't get right.
So with IBM, I kind of thought that I always thought they were a technology company. Apparently, they are more of a business consulting company. They have a lot of business consulting, and with businesses cutting back, potentially, they've been affected in that way. They certainly did not participate in the technology run up post pandemic. But again, there's a company that probably people don't know what they do at this point. Like, I don't even know what IBM does at this point. I do definitely know what Microsoft does, and I know that they're a technology and very big in cloud computing. Whereas IBM, I know they make the Xbox, right? Because I play the Xbox with my son. So, like, I know what IBM does, and I'm using a Surface Book. IBM, I don't know what they do anymore. And I think that these are companies that may have value, but they certainly have not run up the way a lot of the other part of the market has.
Yeah, they weren't looped into that work from home category. And I think that's really, the work from home category. And I would even say, I forget who it was, but they brought up a great point on CNBC that it shouldn't be called work from home anymore. It should be called work from anywhere, because our way of doing business is significantly going to shift, right?
So look at me. I work from everywhere.
Right? Yeah, I mean, Zoom, I can shoot anywhere in the world. I don't need to be in the studio anymore, like I used to have to, like I did in the past. Schools are being conducted over Zoom. Deals are being made over Zoom. IPOs are taking place over Zoom. So I just don't think IBM was lumped into that group for that. They're not part of that.
I'm going to do some research and find out what IBM actually does at this point, because I know they don't make computers, and I know Microsoft now makes computers. IBM used to make computers, and then everybody else was like, I'm using an IBM clone, and then all of a sudden IBM stopped making any computers, and Microsoft started making computers. It's crazy. But all right, so the last one is this kind of hybrid technology / old economy, which is Disney. Walt Disney, basically they have that digital Disney Plus or something like that. I to be honest with you, I'm paying for it, and the only thing I've watched was The Mandalorian, and I'm waiting for the next season, and I'm like, why am I paying for this thing? I don't watch Frozen. But I mean, needless to say, Disney, parks reopened. I don't know how they are. They're in everything as it is, but they certainly have recovered. Not to the extent that a lot of the other companies have, but certainly have made a recovery. Thoughts on Disney and your feelings about Disney as a technology company?
What's so interesting is that they made such a huge deal of it when, as they were rolling out and opening up the parks. And to be honest with you, I haven't heard anything about that, any sort of follow-up from it at all. I don't know why that's happening, but hopefully things are working well. I certainly don't want to be in an amusement park with dirty little kids running around and all that myself. But I think really what we're seeing is, of course, the technology side of it, of course, the media side of it. Content is king with every business. Once these studios reopen, they have they have the power to create that kind of content. I personally love Disney Plus. Like, I will watch The Simpsons to zone out. Nat Geo is on there. I love that kind of like science Nat Geo stuff. So I will watch it for that. But I think it's going to be interesting to see the evolution of media, almost like with the cable companies, where they're going to have to start thinking about bundling. It's so bifurcated. There's so many services out there. And, you know, I just haven't found anything that's that compelling that I need to have the platform for outside of Netflix and Amazon Prime and, of course, Disney Plus. There's so many out there. I mean, who consumes that much TV? So I think that's going to be interesting.
Cable companies. I mean, I don't see people consuming cable. I mean, except for the fact that people use them for internet connection. You know what I'm saying?
Like, our phone comes with the package. You have to get the package with the phone, the TV, and the internet. I don't even know what my phone number is. We unplug it all the time because we get these calls. I only use these spam calls. I only use my cell phone. Like, the only reason I don't even know what our phone number is.
You get it. You have a phone number because you get it with the package.
You have to, yeah.
I don't think I've sat down and watched regular TV with the exception of HBO in an age. Very rare. So, and I think most people, in fact, my kids don't even consider.
Oh, they don't even watch
Netflix,
TV at all.
YouTube, Amazon Prime, you know, that's it.
Yep.
So, all right. Well, that's the end of our charts. And again, so I'm just going to go and do our standard updates and announcements. Our next newsletter just went out, actually. So you could certainly read our newsletter where we were continuing to tout caution, which certainly was a good piece of advice, you know, going into this market sell-off. If you do not receive emails from DAS, you can certainly sign up at the bottom of our webpage. You can go to dastrader.com to do that. DAS Trader Pro channel will continue to offer educational videos. In fact, I just finished up a bunch of educational videos on options trading. I created those videos based on options level 1, 2, 3, and 4, right along with the regular options levels where you get brokerage permission based on your options level of knowledge. So we start with covering covered calls and those kind of strategies, going to buying and selling regular puts and calls, and then going into spreads and various types of credit and debit spreads, and then from there into writing options and going naked, etc. Certainly, you can subscribe to the DAS Trader channel, DAS Trader TV, and you can subscribe if you haven't already done so to our LinkedIn, Twitter, follow us on Facebook and Instagram. And that's all of our regular announcements. Jill, it is wonderful to be here with you as always, and have a wonderful weekend. See you next week.
All right. Sounds good. Thanks so much for having me.
Yeah, bye-bye.
Take care.